Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of July 7th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week was not kind to Maryland mortgage rates. They did move higher the entire week. If you take a look at the bond chart on the screen, you can see those red candles down means the bond sold off all week and ended down on Friday, which means Maryland home loan rates moved higher. Hopefully you took our advice of locking last week. If not, you lost some on your rate. Now, if you look at Friday's pattern there on the chart, that's called a hammer pattern. If we dig into the technicals, that could be a signal that the bonds reached the bottom, and it could reverse and move higher, which would mean Maryland mortgage rates could move lower. So with that in mind, we are going to recommend floating your Maryland mortgage rate to start the week to see if that pattern can predict higher mortgage bonds, lower interest rates. So what we need on Monday at the close of the day is we need a green candle up on Monday, which support the hammer pattern, and then that would be a reversal on the mortgage bonds. Rates would move lower. If we don't get the green candle and they switch and move lower, that would be a bad sign. Mortgage bonds would continue to sell off. We'd quickly switch to a locking stance. So pay attention, stay updated with us to see if that holds on Monday. Now, if we dig in some of the reports that cause mortgage bonds to sell off, the first big one is the jobs report for June 2014 came out in the Labor Department on Thursday. It was a shocker. 288,000 jobs were added in June 2014, well above expectations. And we also saw the unemployment rate drop from 6.3 to 6.1%. So all this positive economic news rallied the stock market, pulled money out of bonds, and that's why interest rates moved up last week. Now, but if you dig into that report, it wasn't as rosy as it sounds. A lot of the jobs that were added in June were not good jobs. They were part-time employment or temporary employment, but they were counted in that unemployment number. So, a better reading is we look at the labor force participation rate, which is what we always look at. It's 62.8%, exactly the same as it was last month, 35-year low. That shows we're not doing as good as it looks, because it measures number of people 16 years or older eligible to work. They're actually working full-time. So those part-time temporary jobs are not factored into that. That's a true read of what's going on in the labor market. So good report, but not as good as it looks. And then we had weekly initial jobless claims come out on Thursday, rated 315,000 claim, up 2,000 from the previous week. Weekly initial jobless claims hovering in the low 300,000s for the last couple of weeks, so that's been pretty steady. But the big news was in the housing market. First big report was CoreLogic released its home price index for May 2014. It increased 1.4% from April to May. And year over year, May 2013 to May 2014, it was up 8.8%. That's a good annual appreciation rate. Now, it is cooling, and it's down from 10% in April to May, but that is a sustainable pace. 6 to 8% appreciation year over year is definitely an attainable. We've been riding too high on appreciation, so we're cooling off, but it's still a good solid number, and that's right in the range we need to be to keep appreciation going long term. And then the big shocker was the release of pending home sales for May 2014. Surged higher by 6.1% in the number of pending home sales. That was well above expectations of only 1.5%. So remember, this index tracks the number of new contracts signed in May, not necessarily closed in May, but signed in May. This was the largest one-month increase since April 2010, and April 2010 was a huge month because that's when all the people were trying to get under contract in April before the first time of our tax credit expires. That shows you May was a huge month. Maybe we were right about the winter. That had a big damper effect on the housing market, and we said we better see some big numbers if that was true. First big report coming out in May shows that, so that's definitely a great sign for housing. Great time to get out there and buy a home. Now, in the local news, the next free first-time homebuyer seminar is this coming Saturday in Frederick, Maryland, July 12th, which is Saturday, 10 a.m. to noon at the Holiday Inn Conference Center. And then the next one after that is in Clinton, Maryland, Saturday, July 19th from 10 a.m. to noon. And then the next one after that is Saturday, July 26th from 10 a.m. to noon in Towson, Maryland at the Sheraton Baltimore North Hotel. So we got a lot of events in Maryland for first-time home buyers in July. Try to get one wherever you're located. So pick the one that works for you. Sign up. Don't miss your opportunity to buy a home. We look forward to you guys can register for either event, 410-412-3319, or online, www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.